great pleasure to be here in this elegant gathering, and an honor to listen to and follow Inga Beale. Very happy to be here this morning. So, California Earthquake Authority. Now, we've been around for 20 years. Over the next few minutes, I'm going to just briefly describe to those of you who aren't familiar with what we do and how we do it, some of those details, and most importantly, why we do it and what we need to be doing more of. Pardon me. But I'm not from California originally. I am, in fact, a native of the great state of North Dakota. This picture was taken in 1997, 20 years ago, when I was the state insurance commissioner up there. I come from a public policy background, basically. I was in the legislature and lawyer and 8 years as insurance commissioner, including in 1997, which was a tough winter in North Dakota, which happens from time to time. Record snow and a very long winter, and the spring was sort of forgetting to show up, which is a problem. This poor fellow was caught in a blizzard in Grand Forks, North Dakota in March of 1997. When that happens, it is a problem because the snow has to melt sooner or later, and if it doesn't start moving out gradual, it's going to go all at once, which we figured we were in for that spring. So as insurance commissioner, I was very busy getting the word out to buy flood insurance. It was a 15-day waiting period back then. And we saw what was coming. We were encouraging people to get prepared. Towards the end, right before things got real bad, there was frantic efforts to raise the levees, and neighbors throwing heavy sandbags to neighbors. It's an impressive, effort, epic effort, really. But in the end, those efforts weren't enough, not for the city of Grand Forks. The town was entirely flooded, entirely evacuated, town of 55,000 people. At that time, it was the largest evacuation of an American city since the Civil War. And I was the state insurance commissioner. Now that record of largest evacuation certainly no longer stands, not after what we've witnessed over the last few weeks. But we had a mess on our hands, as you can see, back 20 years ago. So why am I mentioning that this morning? Well, this is really how I got into this business, because it left in me a very personal and indelible awareness of the need for financial protection for natural disaster. Something's pretty easy not to think about, but if the awareness doesn't occur until it's too late, that doesn't do anybody a whole lot of good. So I learned firsthand the tragedy that unfolds when people were hoping that maybe the government would take care of them, or that maybe it was something that was covered in their homeowner's policy, or that maybe a miracle would occur and someone would come by and rebuild someone's home. Of course, that doesn't happen. None of those things happen. And it really created in me this passion that I have about financial protection for natural disaster. Oh, call me a nerd if you want, but that's what I care very deeply about, and what I've devoted my career now to. After being insurance commissioner, I moved into the private sector for a while and had the opportunity to actually work at a little reinsurance company in Kansas City where Inga Beale worked at the same time, Employers Reinsurance Corporation, later acquired by GE. I joined that company in 2001, in the spring of the year. And it took me a while to try to figure out how to make an adjustment. I'm a public policy guy by background. And then suddenly I worked for a big, large GE conglomerate. And I was trying to find my way, and how can my passion in public service translate into the private sector? And then this happened. I'd been in the job for about 6 months when the plane struck the Twin Towers, and that tragedy occurred. I lost a friend that morning, as I'm sure many of you did as well. And I spent the day devastated, frustrated, wanting to figure out what I could do, and of course, like everybody else, wanting to help. And it was the next morning, September 12th, when the CEO of GE Insurance Solutions, a fellow by the name of Ron Pressman, a guy that Inga and I think very highly of still today. The CEO got everybody from around the world on the phone, on a big giant conference call, and just 24 hours after the event, and we're all just shell-shocked still, of course. And he spoke to that grief and addressed it head on, and then he said, let's talk about business too, because this event is obviously going to be the biggest insured loss in the history of this organization, maybe in the history of the industry. And then he said something I will never forget. He said, but this is why we're here. This is the moment that will define us. This is why we're here. And so we're going to begin this morning and moving forward, doing everything we can to help our customers, our country, and our society recover from this event. I will never forget those words, and it was a lesson to me in terms of how we all have a responsibility to make this world a better place, and public sector, private sector, we are in this together when it comes time to providing resiliency for unexpected and catastrophic events. And we see it time and time and time again. Katrina, Sandy, a couple weeks ago, Hurricane Harvey. Weekend before last, we all, I'm sure were like you, like me, you were all riveted to CNN most of that weekend, wondering where Irma was going to land, and saw it took that slight swing to the left. Well, we're in California, and it's a magnificent state. 1,000 miles north to south, filled with diversity in all wonderful respects. It has its share of faults, too. Thousands of them. This map, a little hard to make out, but it depicts the complex fault structures that lie underneath the Earth's surface. The levels of intensity in terms of potential for ground shaking depicted in color, with red being the most severe, blue being the least severe. You can see that we've done a pretty good job of populating right on top of where the risk is the greatest. And that's a problem, because while there are thousands of known faults throughout the state, there's many more that are unknown, like the one that hit Christchurch, New Zealand a few years ago. Most Californians live within 30 miles of an active fault. If you live around here in the Bay Area, you have the distinction of living a whole lot closer than that. But most don't have earthquake insurance. And that is an undeniable fact that we absolutely have to improve upon. About 10% of the homes is all in this state that have earthquake insurance. The state that's home to 2/3 of the nation's earthquake risk, that sits on top of that fault structure, 90% of the homes don't have financial protection for this risk. So what if we had a reoccurrence of that earthquake that occurred a little better than 100 years ago in 1906, that massive 7.9 earthquake that struck just off the bay here in San Francisco? Well, there'd be strong shaking felt by more than 2 million single-family households along a 200-mile stretch running up and down this state. 250,000 households displaced. Residential damage somewhere between $150 and $175 billion. That's residential damage. That doesn't account for the bridges and the hospitals and the roads and the infrastructure, or homes where people live. And right now, a whopping total of $15 billion of that is insured. The vast majority is uninsured. So you got this situation on our hands. And then you also have the California Earthquake Authority that was created by the state legislature 20 years ago to deal with this situation and deal with this risk. Very briefly, we were formed in the wake of Northridge, when most of the private carriers didn't want to have this risk on their books anymore. They couldn't. And so they weren't going to write homeowners insurance if the price of doing business was offering earthquake insurance in California, as it is, because we're the only state in the union that requires homeowners carriers to offer earthquake insurance. So the homeowners market was coming to a standstill because homeowner companies didn't want to write coverage. That's when the legislature created the California Earthquake Authority. These are the member companies who have joined us, representing about 80% of the homeowners market. Now, by virtue of being a member of the CEA, these companies can write homeowners insurance, satisfy their mandate to offer earthquake insurance by offering a CEA policy. That's the structure. There are companies that are not members of the CEA. They split up the remaining 20% of the homeowners market. Honest to God, we don't consider them competitors. The CEA is a public nonprofit organization that wants homes insured, whether through us or companies that are not a member of the CEA. Our mission educate California about the risk, mitigate them by helping them make their homes safer, and then providing valuable insurance protection. But it's a public mission. It's a not-for-profit mission. It's one that's fulfilled whether we write the policy or a non-CA member company writes the policy. We've got great financial strength, over $15 billion in claims paying capacity today, rated A-, which is excellent by AM Best. We've been in this business for 20 years now, and knock on wood, we haven't had a really big earthquake yet. We know it's coming. Scientists say there's a 99% probability of a Northridge-style earthquake, 6.7, happening again in California sometime in the next 30 years. They just don't know exactly where that's going to occur or exactly when. But we've had 20 years to get our financial legs underneath us. We are also heavily dependent upon the global reinsurance markets. This year, over $7 billion worth of our claims paying capacity will come from a risk transfer source of either traditional or in the ILS markets. The Lloyds markets, a very important partner of ours in putting together this impressive financial strength. In a way, let me just back up again if I can. Nope, I'm going on. In a way, just let me say, our financial claims paying tower that you just saw is both our strength and our weakness. It's our strength because we offer the ability to withstand a 1 in 400 year event, or an event so large there's only a 1 in 400 chance it's going to occur any given year. It's also part of our weakness because so much of it is dependent on reinsurance, for which we spend so mightily on. 40 to 50% of the premium we collect from our policyholders, we must allocate to the risk transfer that we purchase, which prevents us from being able to make our product more affordable. But it's protection that we have, which is important. So it's both a strength and a weakness that we got to recognize both and deal with both, I think, going forward. What we've done to make a difference here in this state is, first of all, while reconstruction costs of homes have gone up tremendously over the past 20 years while we've been in business, reconstruction costs have gone up 170%. But we have managed to actually, in the face of that, lower our rates by 55%. So relative to the insured value of a home, earthquake insurance costs half of what it did back when the CA was formed. And I hope there's a growing recognition of that through this community because, frankly, we need your help getting the word out that earthquake insurance is not too expensive, not anymore. Maybe it was 10, 15 years ago, but it's not anymore. With these rate reductions in force, people can buy a product that meets their needs if they look into it and are actually motivated to put that protection in place for their family. We've also improved the value proposition of the policy. I won't go through this in great detail, but we were formed to basically offer these elements. The mini policy. Check the box, and if a company offers this by way of earthquake insurance coverage, they've satisfied the mandate to offer an earthquake policy. But there's really not much there. It insures the replacement value of the home, personal property coverage, a whopping $5,000, one deductible, 15%, additional loss of use coverage. If you got to live elsewhere while you're rebuilding your home, get a contractor who works real fast because there's $1,500 worth of loss of use coverage there. And nothing by way of discount for retrofitting that older home. That's what's required by law to be offered. But because we have this public purpose, the CA has over time, especially last year, dramatically increased the value proposition of the policy. Now, personal property coverage up to $200,000, a wide range of deductibles, 5 to 25%, and I'll show you in a second how that impacts how much someone might pay for their policy. Loss of use coverage up to $100,000, and significantly a discount for retrofitting an older home, take 20% off of that policyholder's premium. We've got a good value proposition now. We just need to make more people aware of it. How we're trying to do that is to drive them to our website. We like to say that Californians are now in the driver's seat. And this is what the driver's seat looks like. They can build the policy that meets their own needs and budget just by going to earthquakeauthority.com, jumping on our calculator, which is easy to use, takes you a couple minutes. I even sold Rich McGrath a policy by showing him how the calculator works. Earthquakeauthority.com, choose, you select get an estimate. You need a little bit of information in terms of what you're looking to insure. Here, I just by way of example, built in a local zip code. Reconstruction value, year built was 1980, reconstruction value $525,000. That's the information we need to get the calculator going. You click on get an estimate, and now you're in the calculator, and you see that to insure that home at a 15% discount, the mini policy basically, is about $1,000 a year, $1,000 a year, again, in this area. Someone might say, well, that's a lot cheaper than I thought, especially in this area. I would like a lower deductible so I get more coverage. Well, they can see for themselves how to do that by just sliding the deductible down to 5%, and it produces a premium of $1,900 a year, but that's not bad cost of home ownership in this highly seismic area. But others might think, yeah, that's a little bit more than their monthly budget can afford, and for them, they can slide that deductible dial over to 25%, and they've got an annual premium of $721. So the choice is now in the hands of the consumers. Build the policy that meets their own needs and budget. And as a result, people are responding. Over the last 10 years, our average growth rate was about 7,000 policies per year. Last year, when we rolled out these new options, we grew by 52,000. And that growth, that rate of growth is continuing. In closing, let me just say one more thing, and that is that our commitment is not just into lower rates and more coverage, but also helping older homes understand the importance of retrofitting. A lot of homes, over 1 million homes in California that look just like this. They were built prior to World War II. It sits on top of a crawl space between the earth and the main floor of the home. They wind up looking like this. This is a home that was badly damaged during the Napa earthquake, which was a moderate earthquake. The home just toppled off its foundation. By going under that foundation, which looks like this before we get the work done, by putting in some braces and bolts, which is a pretty simple matter to do like this, you dramatically lower the prospects of that home being damaged. So we've got a program now. It's called the Earthquake Brace and Bolt Program, which has financial assistance to provide reimbursements for people who retrofit their home. We just started this a couple of years ago. We did 8 homes back a few years ago. We're going to do 2,000 homes this year. Each year in January, we have a lottery basically in selected zip codes, and people can apply for this $3,000 grant. In January of next year, we will be in these zip codes, and I've got more information with me if you'd like more information about where in your particular area this grant program will be. So, our aspiration at the California Earthquake Authority, continuing to keep the pedal on the metal in terms of increasing the affordability and the value of earthquake insurance. Expand the funding for those mitigation programs that I just described. And also, terribly importantly, and Inga touched on this, ensure that we're ready for that day when the scientists are proved accurate. And we do have the next big damaging earthquake in California. And we are ready to ensure proactive and effective post-event response by working through and with our partners that are all in this together. So thank you very much, and a great pleasure to be here. Look forward to your questions to follow.